This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. I'm Carol Massar, along with Tim Stenovec. And hey, we got a bunch of stuff that's been thrown at us, I feel like, since early this morning. First of all, no Friday jobs report on Friday. So it's not really a Friday jobs report.
Thanks, government shutdown.
Yeah, here we go again. ISM manufacturing, highest since 2022.
Iran edging toward nuclear talks with the U.S. A U.S. trade deal that slashes tariffs on goods from India. How do investors keep up with it all?
And
that's not it. That's just a few things.
No, maybe they look at the Mag 7. We have a few more names coming out this week. And yes, indeed, as we kidded, Phil. Puxatawny Phil saying we got 6 more weeks of winter. So it's a little...
Yep. That's the easiest thing to believe out of all this.
Just walk outside anywhere in the New York metro or
anywhere
elsewhere.
In the eastern United States right now, or the southern United States. They're getting another cold chill down there, too.
Yeah, it's pretty rough out there. Hey, we're going to talk about the market. Stocks are up, so too are U.S. yields, so we'll get into that in just a moment. Precious metals, though, not so precious on this Monday, and we wonder, is the U.S. dollar to blame? So we're going to get into that. We're also going to get into the minerals war that is on. President Trump launching a multi-billion-dollar stockpile to counter China. So that is certainly top of mind here.
Hey, speaking of launches, Elon's next possible launch when it comes to SpaceX and XAI, plus succession and a subdued outlook. Over in the Magic Kingdom, we got Ross Gerber weighing in from Los Angeles.
Looking forward to that. And what's really going on with global supply chains? We're going to get to the bottom of that as well. But first up, let's get to that trade on this Monday, first trading day of February. Here is Charlie.
Hi, thank you very much. And here's what's going on. We got the Dow, the S&P, NASDAQ, all advancing. S&P perhaps just might see a record close today. 69.88 where we stand, up 49 now. Gain there of 0.7%. The Dow advancing 510, up by 1%. NASDAQ up 217. That's an advance of 0.9%. Perhaps the bigger story, though, the advance in the Russell 2000 index outperforming the S&P today, up 1.5%. The S&P up 0.7. 10-year 4.27% with a 2-year 3.56%. Spot gold now down $250 the ounce, down 5.1%. Precious metal now at $46.41, while West Texas Intermediate crude oil down 5.5%, $61.65 a barrel, and Bitcoin up 2.8%. 78,546 on Bitcoin. President Trump is set to launch a strategic critical mineral stockpile with $12 billion in seed money, a bid to insulate manufacturers from supply shocks as the U.S. works to slash its reliance on Chinese rare earths and other metals. Among some of those names, rare earth stocks, we do have the United States, USA Rare Earth, the ticker there, USAR. It is down 0.9%. Among some of the other names, Critical Minerals Corp down by 1%, but shares of United States Antimony Corp up by 9.9%, and NIO Corp Developments, it is up by 7%. Palantir reports after the close of trading. Ahead of that report, up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been talking about this a lot here at Bloomberg. President Trump is set to launch a strategic critical mineral stockpile with about $12 billion in seed money. It's a bid to insulate manufacturers from supply shocks as the U.S. works to slash its reliance on Chinese rare earths and other metals. Not a new narrative, not a new story, certainly from the White House, but it is something that continues to build, and we wanted to know more about this.
We want to bring in Bloomberg News corporate and economic statecraft reporter Joe Deaux. He joins us from New York City. Joe, Carol gave us a little overview. This news sending shares of some of these rare earth companies higher, even higher today. What do we know about the president's plans? What does he hope to accomplish here?
So what we know right now is that they're launching a $12 billion fund of sorts to allow for something called Project Vault to purchase critical minerals to put into a strategic stockpile that is specifically available to U.S. private companies. The idea here is we've had a national defense stockpile on critical minerals, rare earths, held by the Pentagon for decades. And we use that for obvious concerns of the case that a massive war breaks out and that suddenly we'd be cut off from supplies abroad. But there hasn't been anything specific to private companies. And one of the reasons we're getting here is because we obviously had a long discussion about export controls for the past year that China in particular put on a number of rare earths. And I think that was the kind of question that has started to enter the mindset of the administration and why we're looking at a project like this now.
Hey, Joe, is this kind of akin to something like the SPR, the Strategic Petroleum Reserve? Yeah. Okay, it is. And I want go ahead.
But not like the Strategic Bitcoin Reserve, truly.
Yeah.
I'm serious.
Well,
I think the critics would out there say, hey, there's no use. We can use the SPR. We can use critical minerals, but we can't use Bitcoin. And that's a serious issue.
Listen, I think on some level, this is the way that folks at the White House have been looking around it, which is that you have the equivalent in critical minerals of the SPR.
Okay, got it. So how long will it take for this to build? And I also want to go and we've talked with you a lot about this, about, U.S. government investments in various companies, critical minerals and the like. And I do wonder for an investing audience who's listening and watching right now, does that mean basically the U.S. is saying, we're going to support you guys, at least in this administration?
Yeah. Yeah, I think you have this seed money, right? There's about 1.6 billion that's private capital alongside this 10 billion that's going to be from a loan from the Export-Import Bank in the United States. And we've seen some of this before, right? Where it's like you see that there's private money that comes in alongside federal money. The idea being that, okay, if the federal government is sitting here and backing a project, then it makes sense for private investors to say, okay, it's worth it for us to come in too. I think one of your questions was like, how long is this going to take?
Yeah.
As I understand it, right out of the gates, they intend to start purchasing critical minerals. How does that happen? Well, an important part of this is the administration is apparently in this initiative already signed up more than a dozen OEMs, right? Just like actual consumers of critical minerals. You have Stellantis, Boeing, GM, or some other ones we've reported that have already been brought onto this partnership. Presumably, they will be the ones indicating to the vault, here are the critical minerals that our industries need, right? So automotive or aerospace or other industrial sectors. And then they take the direction from industry of what they should have in this stockpile and begin to go out and buy. So how long does all that buying take? It's a great question. I don't know. I think that's a detail that we're going to have to get from the administration. I've heard the idea that there's not too much a concern that they can go out and actually spend a lot of this 12 billion very quickly to build up this stockpile as quickly as possible. But again, things sound easier than they actually are when you have to actually go out into the market and start acquiring these materials.
Acquire them. Do they acquire them as raw materials, or do they acquire them as processed materials, Joe? Because the processing is something you talk to us a lot about. And given that is capacity in some of these cases to process these is absolutely dominated by China, how does the U.S. even fill the vault?
Tim, that's a great question. As we understand it, it is critical minerals, which could mean anything on the critical minerals list as deemed by the United States Geological Survey. So rare earths are on there, copper's on there, a number of other like major metals are on there. What I think one of the things the market does need to understand is like, are we talking about raw ore? Are we talking about concentrates? Are we talking about refined metal? And then, listen, people are even asking like, wait, will this eventually include derivative products? Our reporting right now says that it is strictly to critical minerals, but these are things that the market's going to have to find out from the administration.
Can we assume that this is not just a Trump administration thing? Can we assume that this emphasis and whatever is set up today is going to continue into whoever is in the White House following Donald Trump?
Carol, I mean, you're asking a question that goes beyond a question that should be asked of just this strategic stockpile, right? It should go to the equity investments and the grants and the loans being given out to companies and everything else that the United States federal government's gotten its hand into. And this is a conversation I have every week with people asking, well, what does all of this mean when Donald Trump leaves office? And I mean, I don't have an answer. And I don't think even the smartest people who are on the inside of all these things truly can give a firm response on what that means.
Joe,
Well,
go ahead.
just
Joe.
to follow though, because I think about this in terms of the investment play that might be here, right? Like even you saw it with Venezuela, right? The oil companies, saying, maybe not so fast. Like there are a lot of issues, and I understand your emphasis while you're in the White House, but again, not so fast because there are some really big problems to be solved. And I wonder if that's the same case, or is this the U.S. starting to follow the China playbook, which might be necessary?
On some level, yes, it is the U.S. following a China-like playbook. And to answer the other part of your question is like the conversations I'm having with people about whether this continues after the Trump administration. I'm talking about people I'm talking to in the markets, investors, companies, right? Like on the buy side, not the government side. They are the ones who have real skin in the game. They have obvious reasons to care about this. And I think it's still not clear to them like what this all means 3 years from now. Yeah. On the other hand, it is a good signal that the government is in this. That is, at the very least, a bit of a calming part of this whole thing.
Joe, you make the point in the piece that the U.S. already has this national stockpile of critical minerals for the nation's defense industrial base. Do we know anything beyond that? What's in it? How much is in it?
Yeah, the Pentagon actually puts out information, not all the time, but a general idea of what is in their stockpile. They also note the kind of things that they feel like they have to have in their stockpile. The Defense Logistics Agency, which oversees the stockpile, got a massive boost from the big, beautiful bill of the money it can use to go out and procure these elements, these minerals that they've been short on for a number of years. And we've even seen in the Federal Register kind of the calls they put out to the market to purchase various materials. I mean, we reported on a big buy they wanted to do of cobalt from the open market. So it's not like a black box. Like we do have the ability to see what it is that they need. Right. And also like in a practical way, like we kind of have an idea just from open markets, like what it is industries and defense need that are in either short supply or technically like a single source, right? Like the rare earths have been a very obvious one. Like we know that both from the market and, from what we're hearing from the administration.
Great update. Joe, so appreciate it. Happy Monday. It's only Monday. All right, Joe Deaux, thank you.
Joe had a busy weekend, I'm guessing.
I bet he did. Bloomberg News corporate and economic statecraft reporter Joe Deaux joining us. Hey, we're going to stay on the markets to a few trades that we've been talking about a lot here at Bloomberg since the wee hours this morning, and that is the U.S. dollar and the gold-silver trade. There's a connection. We did see precious metals really clawing back some losses after a heavy sell-off in Asian trading hours as traders took stock of the abrupt unwinding of a record-breaking rally. It's another story we've talked about, just the tremendous runs, Tim, that we have seen in both gold and silver over the last year or so.
Yeah, so in terms of numbers, spot gold fell by about 5% after it tumbled 10% earlier. It extended its biggest slump in more than a decade on Friday. Silver dipped more than 7% following a more than 16% drop earlier in that session. Remember last week's price action in gold and silver drove so much volume to ETFs devoted to these. They've even outpaced trading values for most of the Mag 7.
Yeah, who'd have thunk, right? All right, so we have seen dollar weakness, though, for a while, but it's been an interesting week, no doubt to say the least. All of this got us wondering about what is really the trade for the U.S. dollar short and longer term. To do that, back with us is Jayati Bharadwaj. She's Director of FX Strategy at TD Securities. She joins us in studio. I'm not jealous of you having to figure out the dollar trade right now, the position you're in. We've seen dollar weakness for a while. Yep. Last week was interesting, right? We had the president talking down the dollar over the last week or so and then kind of backing off of it, right?
We have a strong dollar policy.
Yes.
That's the one line we keep hearing.
And the way the appointment or the nomination of Kevin Warsh to head up the Fed, and the thinking is maybe more hawkish, so maybe more inclined to fight inflation, which could mean higher rates, which would be supportive of the dollar. Is what we're seeing some strength today in the dollar index a short-term trade in your view before it resorts back to some more weakness?
Absolutely. It's been quite the start of the year. You're absolutely right. It was a reversal of the debasement trade, let's say. The debasement trade has had the strongest legs in precious metals, and the second asset class after that, which has been pricing that, is FX. Bond markets and treasuries, thankfully, have been spared from which is why moves in treasuries have been a lot more contained. But precious metals, followed by FX, have been the largest absorber of the debasement trade, which with Kevin Warsh over Rick Rieder, you got a little bit repricing off, which is why precious metals fell and the dollar, rallied a little bit. Tactically, we do think the dollar has room to continue to strengthen a little bit. January and February tend to be very strong from a US data strength seasonality. So we do think Jan-Feb, if the focus remains on US data, you could see a little bit of a strength, but any such strength we think will be very temporary.
So you think the debasement trade has come and gone at this point?
It's not seen the end of it's not seen the end of its last legs. Just think about the number of Supreme Court decisions which are still pending. Kevin Warsh markets are assuming is going to be hawkish, given that he used to be in his erstwhile Fed days as Fed governor. He used to be hawkish, talk about cutting down the balance sheet, but he has now been appointed by a president who wants him to slash interest rates heavily. So we still don't know to this date if Kevin Warsh will play that hawkish profile which markets are expecting him to play, or will he have to, balance the two profiles? He cannot just bite the hand which is feeding him, right? He cannot just talk about a hawkish policy right off the bat. So,
why? Well, it's interesting that you say that, because we did have the president at that dinner in Washington. I think press weren't open, but he apparently made some comments about Kevin Warsh and maybe, having to sue him or go after him. So, I mean, if we should assume Kevin Warsh is Fed chair, is he going to be one that is going to be constantly on the radar of President Trump, especially if he is more hawkish?
Unfortunately, that's the job. That's any Fed chair is going to be on the target of Trump, whoever it is, and now it's going to be Warsh. Warsh will likely be nominated. We don't think it's going to go through any problems in his nomination going through. The next big question would be, would Chair Powell then step down? Odds of Powell stepping down have increased a little bit, but that's under the same assumption that markets think that Warsh will be reasonable, going in line with data, and nothing to do with what the administration
It's almost
wants
like, does the adult in the room need to be there or the babysitter need to be there, right? To some extent?
Yeah, absolutely. And we don't even outside of this, we still are pending decisions on Lisa Cook's trial,
right,
on IEPA being legal or not, on Powell, on the renovation charges on him.
But don't you think is Powell safe as a result of Senator Tom Tillis?
That is the assumption, because a lot of senators, including him, have come out saying that we're not going to approve any nomination for Fed chair unless you get that sorted, which definitely does increase, thankfully, the odds of that being, swamped out and that basically being done and dusted. And that's why also polymarket odds of Powell stepping down as Fed chair have also, increased a little bit. But it all depends upon the timing. I think timing is very critical, but the number of cases is still many-fold, which is why we don't think that the dollar is out of the woods yet.
When you said the debasement trade's not over, is it largely because of the U.S. fiscal house, the U.S. White House creating kind of uncertainty on a geopolitical level? Is that part of it?
It's manyfold. That is definitely one big aspect. The second big aspect is that the dollar as a safe haven, that's no longer working out to be true. The dollar, in fact, has been behaving like a high beta currency. Its correlation with rates is broken. Its correlation with equities is broken. And now the global portfolio manager or the global foreign investor is now looking to invest outside the U.S. I'm not saying they're selling U.S. assets. They're not. But the marginal wallet, they're now allocating to commodities. They're now allocating to global equities outside the U.S., right, which is also weighing on the dollar. And the last thing, which I think is really playing out here, is that the world outside the U.S. is holding up really well.
Yeah, it's such an interesting story in terms of what's going on outside the United States. Jayati, thank you so much. Really appreciate it. Jayati Bharadwaj, she's Director of FX Strategy at TD Securities.
Hey, coming up next on Bloomberg Businessweek Daily, Disney shares are tanking. Tesla's lower too despite a broader rally. One investor in them both weighing in next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got stocks pushing higher. We're looking at the potential of a record close on the S&P 500 index, 69.90 where we stand right now, up 51. Best level of the day, up 0.7%. The Dow up 1.1%. Dow Industrials up now by 524 points. The Nasdaq Composite Index up 219, up 0.9. And the Russell 2000 Index of small cap shares outperforming the S&P today, up by 1.5%, keeping it all in context there. The S&P up by 0.7. The 10-year at 4.27%. Spot gold is retreating by 5.2%. $46.39 the ounce. Silver down 7.3%, $78.99 on silver. And West Texas Intermediate crude down 5%, $61.93 a barrel on WTI. Bitcoin, meanwhile, up 2.6%, 78,400 on Bitcoin. Disney lower after the world's biggest entertainment company gave a tepid forecast for growth in the current period, and the market is awaiting news on who will be the next CEO. Disney shares down now by just about 6.8%. We'll have a whole lot more on Disney coming up in just a moment with Ross Gerber of Gerber Kawasaki. Again, repeating, S&P down up 50, S&P 500 index up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So Elon Musk is in talks, or at least said to be in advanced talks, to combine space exploration technologies. We're talking about SpaceX. Is that what you call it? I'm a formal kind of gal.
She's always like,
haven't you been to dinner? You know, white.
Meta platforms, alphabet, space exploration technologies.
It's SpaceX. I think I did I don't know. I think our story even spelled it out.
Hey, that's the Bloomberg News way.
It is kind of the Bloomberg way. All right, I'm talking about SpaceX. They're talking about, according to people familiar, Elon may be in advanced talks to combine SpaceX with his AI company XAI. ARK Invest CEO and CIO Cathie Wood actually weighing in on this. She's a longtime supporter and investor in all things Elon, weighing in on that possible combination of SpaceX and XAI, and maybe that upcoming SpaceX IPO. There's a lot here. Just listen.
We're feeling great, especially the rumors are, we have no idea if it will go out at 1.5 trillion. Again, rumors. But SpaceX has big ideas, orbital data centers being the latest. And XAI, which we also own in ARKVX, is going to become a part of this ecosystem. We do believe, and I think we're getting more information now, that this is becoming more and more likely.
So when SpaceX does make its debut on the public markets, when it lists, when it IPOs, what does that do to your fund? How do you respond to that?
Yes, the wonderful thing about ARKVX and interval funds generally, in terms of the way we've constructed this one, is that it's 20%, roughly 20% public, 80% private. And when SpaceX goes, we will obviously bump up the public position, but we don't have to sell it.
All right, that, of course, is ARK Invest, Cathie Wood with Bloomberg's Scarlett Fu earlier on Bloomberg TV. Now, SpaceX is awaiting that possible IPO. I was just looking at Tesla today, which is down nearly 4%, Tim, at their intraday low.
Yeah, an interesting move coming from Tesla today. Then let's also take a look at what is happening with Disney, because that's down 8%, at least at the low. That stock sold off as the home of Mickey Mouse, with a tepid outlook, and it's getting ready for a new CEO.
Yeah, there's a lot going on. Let's bring in Ross Gerber. He has thoughts on both of these companies. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. They've got about $4 billion in assets under management, and he's with us from, I bet, lovely Santa Monica, California. How warm is it by you?
75 and sunny. I'm right next to the beach too, so I don't want to rub it.
All right, that's enough for us.
All right.
We're moving on.
We're done with you. No, we're so glad to have you here.
You asked.
I know. I'm a sucker for pain here. Hey, what stories more interesting to you, Ross? Is it Tesla and the possible combination of SpaceX, XAI, or is it Disney?
Well, the Disney story is a little bit sad for me, because I'm just like, I've owned this company for my whole life, and Iger's done a great job sort of refixing the business and getting good movies back in the theaters and such, but they just can't seem to get the momentum going, and the valuation for Disney just makes no sense. It's so cheap relative to what they're willing to pay for Warner Brothers assets, which are garbage compared to Disney. But they just seem like maybe this company needs to be broken up.
Wow.
And that's part of it.
What does that look like? What does that breakup look like, Ross?
Well, see, Josh and Dana are both great executives. So they have, the fact they have to pick one is the problem, because Dana runs entertainment and Josh runs the theme parks and all this kind of stuff. And they're just completely different businesses with different skill sets. And maybe they should be co-CEOs, even though I hate that formula for businesses. Disney's just, the parts are worth more than the whole, and we've waited 5+ years since the pandemic for them to do something good, and they haven't. So it's time for change at Disney, and I think it's breaking up the business and spinning off ESPN.
Would that be the only thing spun off? It would just ESPN would be...
No, it should be 3 companies is the way I see it.
What should they be?
Well, you have theme parks, resorts, and experiences. The cruise ships is one, and then you have your streaming business as the other, and then you have ESPN Sports as the third, right? So you have entertainment that's non-sports, and then you have a pure sports play, they just sold 10% to the NFL.
Would that work with all the cross-pollination that happens these days? Like, you go on a Disney cruise, and the Disney IP is everywhere. You go see a Disney film, and if it's a popular film, that ends up becoming something that is an attraction at one of the park and resorts. It's supposed to be this virtual cycle that for years worked out really well. Could they still do that as separate companies?
Yes, and I think it still works now that way, but explain how the sports business really matters when it comes to going, on a cruise. It's nice to have ESPN on the TV there, but there's no relationship really. So I get when you're making a movie, you want it to go through the streamers, but I'm saying keep that all together. And then they license all their IP to the theme parks and resorts anyway. So it would just be an exclusive licensing agreement. I think it's actually quite simple. I think the real issue is extracting value from the very valuable assets and IP that Disney has, while everybody's fighting over crappy IP and assets. Like Disney has the best assets in Hollywood. So, I don't know. I just don't think they have a future. The market's saying wait, we don't see this future that you're making for us. Iger's ready to leave. So I actually think this story is pretty interesting because, the entertainment business is never going to be the same after this merger goes through. And I don't know what it looks like on the other side.
One more company.
So Disney can...
One more. I just want to ask you one question. No, forgive me. I broke in on you, but I do wonder. Ross, go back a few years, and I remember doing this deep dive on Disney and talking with Bob and all the executives, and just this whole idea, like Tim said, this cross pollination, and people were.
This was before Bob left for the first time.
Yeah. Right. Exactly. And people talked about the value of ESPN, that's the value of the company, but it sounds like there is value in a lot of parts today. And hence why you would argue for breaking it up into 3. Is that true?
Yeah, I love the parks and resorts and cruise business. That business is killing it for them. It's tons of cash flow. People love the cruises. They just launched a few ships. They've got a great business there. I love the streaming business. They finally, once they get this all under one roof under Disney Plus, Hulu Disney Plus is a great streamer and a real competitor out there to the other streamers. And then you got ESPN, which is now dominating sports again and really has a piece of every major league out there from a broadcasting perspective. But ESPN financials don't make any sense next to the cruise ship financials because ESPN loses money having these big events, that we all want on ESPN, and they make money when there aren't big events, actually. It's kind of a weird business. So they just don't complement each other, and you saw it in the earnings report, which was generally a very good report for Disney, and the stock gets hammered because when you look at all the moving parts, it's never consistent. And so I just think if they were able to prove that these assets, I think, are worth closer to $150 a share, and that's what it was trading at, then I'd say I wouldn't be saying this.
Yeah,
but at $100 a share, you got to break up this company and find value for its shareholders after 5 years of waiting.
Okay, Disney down 7.4% at 104.43 right now. In your view, the move to break up a company into separate parts, to combine a company in two different companies into one company. Right. Let's talk a little bit about Elon Musk being in advanced talks to combine SpaceX with xAI. This according to people familiar with the matter. You had a really interesting comment out on social media earlier today. You wrote, X was out of money, merged with xAI. xAI out of money, merged with SpaceX. SpaceX out of money, merged with Tesla. When they are all out of money, ... You obviously are not a fan of this idea.
No, it's not that. it's just, first of all, you're saying Elon Musk's in talks with himself? Like, who's he in talks with? I don't think Elon Musk talks to anybody. He's going to do this. So he's going to merge all three companies because he has to, and he needs to, because Tesla has $44 billion on the books and they need the money. And every one of his projects is well out into the future. So I'm not going to tell you whether I think all these ideas are going to work or not work. I don't bet against Elon. I think that's up for the future to determine, but all these businesses are incredibly capital intensive with very, very questionable profit margins or even viability. Like data centers in space is not a viable business. Let's be real. It's very expensive to build a data center on Earth. Now imagine putting it up in space. Like this is just, we're getting into this level of absurdity. So that's why I put it out there. Like, what happens next? So I've got like 18 projects that are incredibly capital intensive. Will people just keep giving Elon Musk money forever? But a lot of it's the same people who he's made money for, just giving him back the money they've made for the next project. And so that's why I put the ... It's like, well, what happens when this all comes together? Because that's what's going to happen. It's all going to come together as one. And then what happens to that business looking forward? They'll have to raise money. And so that's what this looks like in my mind as we go out over the next 12 months.
As an investor, you have invested in shares of Tesla. You buy and sell. You've done that. We've talked about that a million times. You own Tesla cars. What is it for you that you need to...
I own X too. I own XAI too.
That's right. Okay. So I'm just curious. So you obviously like what, a lot of what Elon's doing. What is it that has to happen that makes you say, I'm done?
No,
I'm out?
Please don't say that I like what Elon's doing. I actually abhor him. Okay. He's doing horrendous things that I don't agree with at all. And I want to make that very, very clear. On a personal level, I think his behavior is disgusting. Okay. And I think his viewpoints are disgusting, and he's destroyed the brand. But he is one of the greatest engineers of our time, and he's a great inventor, and he's built a lot of amazing things. So I don't discount that, and I'm invested in that. But that said, at some point this all has to come together and actually work. And that's, the big question. So I don't bet against Elon, and I am sort of betting for him, or I actually, what I say is I bet with crazy people sometimes, and that's worked for me over my life. And, so I have a certain bet with him, and I think he's crazy, and maybe he pulls this stuff off,
Yeah. So you're willing to make the bet on Elon still. Just got about 15 seconds.
Look at the other side of the coin is you have Tim Cook at Apple who won't do anything. This guy is so risk adverse, he's scared to get in the water. You know what I mean? And so like Apple's just sitting on the cusp of the AI revolution, like with binoculars going, who do I pay next? Because I haven't done anything. So, you have Elon on one end of the risk spectrum, and you have Tim on the other.
We got to go. Always love talking with you, Ross Gerber.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, precious metals lower. The Dow, the S&P, NASDAQ very much in the green right now. Stocks climbing on this morning's factory data. S&P right now up 46 at a record 69.85. That is a gain of 0.7%. The old record, by the way, on the S&P, 69.78. So if we close above that number today, it will indeed be a record on the S&P. The Dow up 523 right now, up by about 1.1%. S&P close to session highs now. NASDAQ up 185, up by about 0.8%. The outperformer, though, Russell 2000 index of small cap shares up 1.4%. S&P up by 0.7. 10-year at 4.27%. Spot gold down 4.4%. Gold now at $46.78 the ounce, while West Texas Intermediate crude down 5%, $61.95 a barrel, and Bitcoin up 2.6%, 78,424 on Bitcoin. M&A news on this Monday. Devon Energy has agreed to acquire Coterra Energy for about $21.4 billion in stock in an all-stock merger. Shares of Devon Energy, they're up by 0.5%. Coterra down by 2.5%. Again, recapping, the Dow, the S&P, NASDAQ, they're all higher. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much watching the markets for us. We're also keeping an eye on the supply chain software company Manhattan Associates. You might recall shares actually swung nearly 14% from peak to trough last Wednesday, Fed Day, after the software company reported cloud subscription revenue that Citi said slightly missed expectations. Tim, it also gave a full-year revenue forecast that came in slightly below consensus.
Stock down just about 13% year to date. It dropped 36% last year. Back with us to talk about the business, the company's window into global supply chains and economic momentum, Eric Clark, president and CEO of the nearly $9 billion market cap Manhattan Associates. He joins us from Atlanta. Eric, one of the reasons we love talking to you is because you have this view into the global supply chain, given the business that Manhattan Associates is in. What are you seeing at this current moment?
Well, we're seeing some craziness in software, that's for sure, right? We had a pretty good quarter and a pretty good full year in 2025. We announced cloud revenue up 21% year over year, and ramped ARR up 23%, and our RPO up 25%. But we're hearing a little bit about this bear market narrative that AI is eating software. So what we're seeing in our space is that we continue to be the market leader in the supply chain space, and we continue to win more than 70% of the deals in the market. Yeah.
Well, what are you seeing from clients right now? What are you seeing on their like what are they using the platform for? What are they actually sending from one place to another place or bringing into the United States? And how is that different from other periods where we've spoken to you?
Yeah, so this period over the past year hasn't changed very much. There's a lot of instability, right, with global unrest and legislation, tariffs, et cetera. But what we're seeing is customers are moving forward with their plans, right? They know they've got to get past this and they've got to move with speed and simplicity. So our software is focused on everything from warehouse to transportation to order management, point of sale, as well as supply chain planning. And what we saw in Q4, which was pretty consistent with what we saw across 2025, is we have customers buying in all of those spaces. We also see customers continue to expand across the platform. So again, really making it clear that supply chain is strategic and mission critical software.
So, okay. How do you describe, based on what you're seeing, you do, as Tim mentioned, a great vantage point. You play into so many different industries. You see a lot. And based on demand or what you're hearing from customers, you can get a read on certainly the U.S. economy, perhaps the global economy. So describe that for us.
Yeah, well, one of the spaces we're big is retail. And, just coming off of the holiday season, what we saw from our customers is volumes up, right? So transaction volumes are up. And the interest that we're seeing from our customers is around efficiency. So what we saw is 40 to 60% of our customers are doing online orders that are fulfilled directly from stores. And that's leading to about a 40% reduction in logistics expenses. So they're looking for all of these opportunities that how can they use software and how can they use AI to get advantages, be more efficient, save cost, et cetera.
Well, I love that you went there. And I think Tim and I keep trying to dig into what this means in terms of AI and so on. When they can get more efficient and perhaps cut costs, where are they getting those efficiencies? And does that mean they're cutting out people in that logistical chain?
We did an early access program with our agentic AI, which launched about a quarter ago. And then we actually just launched the commercially available software a few weeks ago. And what we saw during the early access program is that many of our standard AI agents, as well as the custom agents that our customers are building using our Foundry, can often have a reduction in headcount. And it's really easy to count that. And it's really easy to see the ROI from the reduction in headcount. But what many of our customers were recognizing is things like, hey, in a warehouse, I can increase my shipping lines by 3%. And when you start to think about a 3% increase in shipping lines across all of the distribution, that's real money. And that's often more valuable than the headcount reductions. But clearly with these agents, we're seeing some of both.
Okay, because that's what I was going to ask you is, does that mean, hey, we can do more with less people, not meaning that we have to cut people, but we could just do more with the existing crowd, or saying, hey, we can do more with, and we don't really need all these people. Like, which is it? And I think that's what we're trying to figure out.
Yeah, and there's some of both. But I think what is getting our customers more excited about is the more that they can do, the more shipping lines and the fewer disruptions. And when you think about supply chain is a series of disruptions, right? When the day starts, you never know what to expect and things change all day. And the faster that you can react to that, the more successful of a day that you can have. And then you start to stack those up day after day, and having AI agents identify issues and solve issues before they happen makes a material difference.
As Carol was talking about,
always a reduction of people.
Okay. So that kind of goes into my next question, is about different areas where maybe the technology is used to different extents. Your customers include companies that play in the consumer goods, food and beverage, grocery manufacturing, medical and pharmaceutical, retail, trucking, the list goes on. Where are you seeing companies that are strong right now? Where are you seeing strength and where are you seeing weakness in terms of those companies?
We just reported earnings and we talked about the vast array of customers across all of those industries that are buying as net new customers right now. So I think we're seeing strengths in all of them. And I think it's one of those standard scenarios where you've got leaders in each one of those spaces that are doing really, really well right now, and maybe some laggards that aren't doing as well.
So if you look, so it's on a case by case basis, is what you're saying. It's like you have customers in each of these categories that are doing well, and you have customers in the categories that are not doing well. What sets the ones that are doing well apart from the ones that are not doing well?
Well, what we like to see is that transaction volume going up across all of these software platforms. So that means they're doing more business, they're moving more merchandise. That's kind of how we measure the success, where we can make them more efficient and allow them to do more. That makes us happy.
So forgive me, I have a Monday brain in a big way. Might have been all the hibernating I did over the weekend and all the binging of TV I did. But so did you give a word to kind of describe the economy, like how you would see it right now?
Yeah, honestly, it hasn't changed much, over the past several quarters. So when, Liberation Day first came, I think there was a kind of a freeze and a pause in the market where people wanted to wait and see how things were going to play out. But pretty quickly, people realized it was going to be ongoing change, and they had to get back to their strategy and they had to execute the strategy. So we're really not seeing the delay from that anymore. I think it's similar to other supply chain disruptions that we've seen, whether it's COVID or bridge collapses. You get a short-term pause and then you get back to business.
Are you seeing just 20 seconds nearshoring or onshoring of U.S. goods?
We continue to see customers take strategic approaches to that, and that varies by industry as well. But clearly, those types of decisions are not quick fixes, right? When people have built supply chains outside of the U.S., it takes time to rebuild those supply chains in the U.S. But again, our software is all about speed and simplicity to allow them to make those changes very quickly when their supply chains will allow them to do it.
All right, good stuff. Always fun to check in with you. Be well. Good to get some time with you, and so appreciate it. Eric Clark, President and CEO of Manhattan Associates, ticker on the NASDAQ, MANH, joining us from Atlanta. All right, stick around, everybody. We're going to get a quick check on the trade for you and also some of those stocks on the move.
Isabel is going to be here. That's next on Bloomberg Businessweek Daily.